Good afternoon, and thank you for that welcome. Matsa Resources, the code's MAT. I've been involved with this company now for about 10 years. It's had some growth, it's had some transformations, and we are now concentrating at Lake Kerry, where we've put that project together, and quite frankly, quite proud of what we've achieved and where we're going to go. So I'm just trying to get this ticker working. There we go. So I think one of the questions that we've been asked over the last few months is, who is Matsa? What is Matsa? Well, I'd like to explain what we are, and hopefully we can then discuss where we're going to go. So the presentation today is going to be hopefully more of a discussion rather than me just giving you a lecture. We've put together what we believe is a very formidable package of ground at Lake Kerry, 503 odd square kilometres, and we'll give you some maps shortly. But without focusing on what it looks like, what is it? It's a very large area of ground that's got 3 granted mining licences. It's got 3 gold mines within that 503 square kilometres. It's Red October underground gold mine, Fortitude Stage 2 gold mine, and the Devon pit. But really the reality is, we've looked at 2 of those pits, and in those 2 of those pits, we believe we can make $95 million positive cash flow within a 24-month period. Fortitude Stage 2 can make circa $55 odd million within 24 months, and Devon can make circa $40 million within a 12-month period, and both of those can be done concurrently. We then have Red October, which is an underground mine, which we've just recently looking towards winding down its operations, and I'll explain why. I'll tell you why it's a good idea. And that there can go back into production at any time we want. So what is Matsa? Well, I believe it's a company that is a developer. It can go into production at any time it wants to, obviously at a strategic time under strategic circumstances. It can make a lot of money. We've just got to get the timing right. And that's what we're on about today. So what have we got? And that's kind of flowing through what I've just spoken to you about. In total, we've got 8 million tonnes at 2.6 grams per tonne gold for 654,000 ounces of gold. Now I'll ask you to note, 2.6 grams. It's a great grade. It's a profitable grade. It's an economic grade. Predominantly, this is at Fortitude, Red October, and Devon. We've got cash flow potential of plus $90 million within a 24-month period. We've got world-class exploration potential. Very importantly, we've got a really good strategy. We've got a really good plan, and we're working towards that. And of course, if you don't have the right team, you will go nowhere. 654,000 ounces of gold, and the company that's currently got a market cap of $23 million. It's ridiculously cheap. One of the reasons it's ridiculously cheap is because we've got such a low number of shares out on issue, 300 odd million shares. Had we 1 billion shares, I would suggest to you that our share price would still be 7 cents and would probably still be we'd be worth 70 million, but we're not. So there's the opportunity for investors to get in. We've increased our gold resource 48% in the last 12 months. And again, it's really good grade. The Devon pit, we've added 65,000 ounces at 4.7 grams per tonne. And it's an open pit mine. It's not underground. We've got a tremendous exploration tenement package. We think that over the next 24 months, given the right exploration budget, which we think will cost about $15 million, we believe we can find somewhere between 600,000 to 1.35 million ounces of gold. And that will be on top of our 650,000 ounces that we currently have. So we hope, we have certainly got the potential of being somewhere between 1 to 2 million ounces if all goes well. So this is our ground. This is what we're so proud of. 503 square kilometres of contiguous ground at Laverton. We've broken it up into hubs, the Devon hub, the Red October hub, Fortitude hub, and we've colorised that. We've got about 30 targets on this 500 square kilometres, and to make it easier for all to understand, we've broken it into hubs, and that's what we're now referring it to. So we've got the ground, we've got the ambition, so what do we want? Well, we want our share price to reflect our success. We want to have a profitable, we want to have safe production, and we want growth. We want to do it with leading environmental and social practices. What do you want as shareholders? Well, I guess you want the company to deliver. You want the company to deliver what I'm preaching to you right now. Well, that's what we're going to try and do. What's the best measure of that? Well, your return on investment. You want the share price to go up, and you want dividends. We know that. So that's what we're going to work towards. Of course, ESG is very important nowadays, and we're very aware of that as well. So we will operate environmentally friendly and in a socially responsible way. So this is the new way for Matsa, and this is our new strategy. We want to develop a profitable business. And for us to develop a profitable business, we need to develop our own mill. So we've done a scoping study, an economic study for our own mill. We think a 600,000 tonne per annum plant is what's required, upgradable to 1 million tonnes after a few years. We believe that'll cost $55 million. And again, I draw your attention, we believe just 2 of our pits will make $90 million in positive cash flow. So we think it's well and truly covered. We think it's a compelling story. We will mine Fortitude Stage 2 in Devon Pit. We will drill out Red October, where we currently have 173,000 ounces of gold at 5 odd grams per tonne. We think we can easily find another 300 odd thousand ounces there. We will develop Olympic, Hill East and Gallant pits. They're all within our Devon hub and our Fortitude hub. And we will explore. We've got a fantastic target at Fortitude North. That could be a huge standalone mine. We'll put a lot of effort into that. We'll find new gold resources to go into our pit, into our own mill. More importantly, we've already identified several neighbours that have got substantial tonnes of ore. Really, they belong in a Matsa-owned mill. We've already spoken to those companies, and we think that they also believe there's a compelling story for their ore to go into our mill. So I think a mill is inevitable. I think it'll happen. I think the area needs it, and that's what we'll do to grow our Lake Kerry. So we can do it. If our attitude's correct, we can nail this. So we'll select options to generate short-term cash. We're very fortunate. The Devon pit, that does not need to go into our own mill. We could mine that. We could get an ore purchase agreement with Anglo Gold Ashanti. We already have 4 years left in our Red October ore purchase agreement. That could go to Anglo Gold Ashanti, and if it did, we think we can make $30 million out of that. If it goes into our own mill, we'll do 40, but the toll milling might be better. So we really will address our cash flow issues. We'll address the best options. We're not going to do things just for the sake of doing it. That's why we took the really difficult decision to wind down operations at Red October. Red October was not delivering the shareholder returns that shareholders wanted. But we are totally committed in that we think that Red October can be a long-term mining operation. We just need to drill it out. The gold's there, but the confidence is not. We need to embark on a substantial grade control drill that'll help us give our long-term mine plan. We'll execute our 2-year exploration program. Obviously Red October, as I said, Fortitude North, and we'll develop the Devon hub. We'll in fact commence drilling at the Devon hub within the next 4 or 5 days. And we will build our mill. Discussions with financiers have already started. It's very early days, but we remain very optimistic. So I say to all shareholders and all new shareholders, a mill is the key for substantial value at Matsa. Again, I'll remind you, 654,000 ounces for a $23 million market cap, it's crazy. It can't go on forever. The strategic pathway to production is what we need to do, and that's what we will do. So just looking at the individual projects, Fortitude Fortitude Hub contains Fortitude Stage 2, and it also contains Fortitude North. But we've got 366,000 ounces of gold there. We've converted about 54,000 ounces into a reserve. There is underground potential there. But very importantly at Fortitude, this Fortitude Stage 2 open pit mine will produce 54,400 ounces of gold and produce some $55 million in positive cash flow. Devon, we've currently identified 115,000 ounces, very high grade open pit. The actual Devon pit itself is looking like 254,000 tonnes at 4.7 grams per tonne to produce just under 37,000 ounces. This is a granted mining licence. All we need to do is do a mine plan. This could be operational within 9 months. This feed at 4.7 grams can go anywhere. We could quite easily truck it 120 kilometres to Leonora if we needed to. Red October, 173,000 ounces. I'll come back to Red October, it's a great story. Red October gold mine itself, it's down to 550 metres. We have been operating it now for about 18 months. We've been very selective. We've spent a lot of time understanding the gold mine. We've spent a lot of effort in understanding the best technique for a narrow-veined, high-grade, structurally controlled underground gold mine. We've been an owner-operator, so we've had all of our own equipment, and we've developed that all by ourselves. Our C1 costs for the last quarter were just over $1,200 Aussie. Our all-in sustaining costs were $2,150 Aussie. The reason why those all-in sustaining costs are so high is because of our milling arrangement under a toll milling concept. We can reduce that significantly if we have our own mill. So why did we wind it down? Well, we had to. We could not develop enough resource in front of us to give us a several-year life of mine. So we could not do it economically, we could not do it efficiently. So what we've decided is by winding the operations down and focusing on exploration, we can get 1 or 2 drill rigs underground and we can go ahead and drill it out unimpeded. And we think with that by doing a substantial grade control program, that will then have the resources to be able to convert into a reserve and give us some sort of life of mine. We think the Red October gold mine is a substantial asset. We think we need 18 months and about $7.5 million to produce something that could be quite spectacular. We think that this can go into production at any time we choose to. Again, with the high grade, it could go to Anglo Gold Ashanti through an ore purchase that's currently in existence, or go through our own mill. The decision's yet to be made. Importantly, we've got the blueprint, we've got the experience, we've got the knowledge, we've got the know-how, we've got the equipment. Previously, 40,000 ounces per annum were being mined at Red October by Saracen until it got shut down. We think that we can achieve those figures again. Fortitude Stage 2, I know I'm jumping a little bit, but I'm just trying to get last bit of information out to you before I wind down. $55 million can be made at Fortitude Stage 2. The important thing is, this is ready for mining today. It is fully permitted, it is fully cleared. All that we need is a home for the ore. 1.7, 1.8 grams per tonne, 1.2 million tonnes of ore. It really is a fantastic deposit for our own mill. Devon's rapidly advancing. As I mentioned, we will commence drilling here in the next 4 to 5 days. We are targeting a similar volume of ore to be discovered. Interestingly, GME had a small pit that they mined here. They achieved 93% metallurgical recoveries. They produced some 10,000 ounces out of 45,000 tonnes of ore. Devon Hub Exploration has got a substantial more to go, and we think this will be a focus of ours for the next 12 months. The company itself, as I said, it's got 313 million shares out on issue. It's got just over 100 million options that are all out of the money, so you're not going to see any dilution until the share price goes to 17 cents. Current market cap's $23 million. We've got cash and liquids right now as we speak of $4.5 million. We've got a strong future, we're forming it, and it will come. We will deliver. Thank you.